morning to all traders and welcome to this Thursday's Market Insights video on FX minus. It's the 20th of August. We have a very interesting session, I would say. We're expecting the jobless claims from the US coming in, providing some sort of guidance for forward policy setting, perhaps, since we also had the FOMC meetings yesterday. We're going to come back there in a minute. We also have the Turkish interest rate decision and Norwegian interest rate decision. So we have a lot to analyze. I want to identify which currencies are weaker against the dollar, but the crosses. So we're going to look at the euro pound to see whether it is euro or pound that is weaker, and also Aussie against Kiwi, so that we can see whether it is Aussie or Kiwi that is weaker against the dollar. Dollar was weak since the beginning of the week, and it's actually been weak. But yesterday, after the FOMC meetings, and despite the fact that the FOMC meetings showed that uncertainty is elevated, we saw the dollar rising. That is because there's been talks, actually very, very strong thinking about yield control, okay, yield curve control from the Fed, because they've done forward guidance, they've done quantitative easing. There is a third tool coming into play, might come into play maybe until the end of the year, but they've actually poured cold water on the idea of yield curve control for now, and that seems to be helping the dollar moving up. Everything else went pretty much weak against the dollar. Starting with the euro against the pound, I'm still looking at this as part of the corrective wave 2, okay? So it's either A, B, and a C all the way up, or 1, 2, 3, 4, and 5. Either way, I'm still looking at this as a correction, A, B, C. Now, we're looking at this being an A, B, C, and we're looking at 1, 2, 3, 4, and 5 last time, if I recall correct. Now, I've changed here the counting a little bit because, well, we've started consolidating into this area, and that looks increasingly to me that is going to end up like a triangle in wave B, right? Which means 1, 2, 3, 4, and 5 in A, B, C, D, and E. So we'll have wave D and E to come into play, right? And then we're going to get another 5-wave move to the upside, perhaps to the 0.93, okay? The 78.6 Fibonacci retracement of wave A, and start moving lower for wave C, which is also going to be wave 2 in the primary degree. Obviously, this is going to be below the previous low of 0.86. So now, in case this doesn't turn like a triangle, most likely is going to be like some sort of complex pattern. Now, jumping quickly on Aussie against Kiwi. Let me just go a little bit further out here. This I'm looking as part of an ending diagonal, right? Which is 1, 2, 3, 4, and we're expecting 5. Last time we talked about this being an ABC up here, and we were looking at this opportunity. This, I mean, it looked impulsive, to be honest. This looked correct, and this looked impulsive as well, but it was only a corrective wave. It was an ABC, not a 1, 2, 3, 4, and 5. Since we broke above that level and then continued higher, obviously, this now became, we had to recount a little bit. And now I'm seeing this as an ABC in wave 4. Now, I've pulled the Fibonacci extension between waves A and B, and that brings us to 111. Since we're also looking at this as 1, 2, 3, and 4, well, consolidation here could be a triangle, could turn into a flat, or whatever. Wave 2 is sharp, so I'm looking at this breakout to the upside to be the final wave 5 in the minor degree, because it's 1, 2, 3, 4, and 5. And from 111.23, I will be looking for signs to start taking some shorts, because this 5th wave, it's got actually very good. This is a very good opportunity. We're talking about like 2,000 pips or so, okay? So I would keep an eye on that, how it performs as well. And if we go quickly on dollar against Turkish lira, we talked about this opportunity as well. This is 1, 2, 3, 4, and 5. I'm looking at this as an impulse in wave 5, okay, the final wave. And since we've already done that, I mean, I wouldn't be surprised if if that turns into an ending diagonal. We could go somewhere like that, some sort of formation that is going to take us to around the 7.189. And I'm looking at this level because it's a 38.2 Fibonacci and expansion, let's just say, right? So we've had this correction done, 1, 2, 3, we're gonna get a 4 and then another move to the upside, right? Potentially a false break above this ascending trend line as well. 7.89, this is what I'm looking at for then start looking for prices to move lower. And then quickly on dollar against the Norwegian krona. We've looked at this opportunity a while ago as well. I've been looking at this as wave 4 in the cycle degree, right? We talked about this being an A, B, and a C, and it's actually out pretty well. We'll have the 1618 extension and the 78.6 Fibonacci retracement of the upside move at around 8.59. This is a very good confluence level, which to me looks like that wave C is going to be 1, 2, 3, 4, and 1, 2, 3, 4, and 5. So I'm expecting another wave down to the 859, and from there I'll start looking for signs, validation signs on the indicators as well as price action, of course, to go into long positions. And these obviously this long position perhaps is going to take us to above the 12 because we're still in cycle wave 3. Thank you very much for watching, and don't forget to watch us tomorrow, where I'm going to analyze a couple of stocks.